Like with any investment, there are benefits and downsides to investing in gold and silver or any other precious metals. And so today, I'll talk about that, the benefits and downsides of investing in gold and silver.
Grow your wealth, live on your terms.
Welcome everyone. Welcome to the Wealth Building Tips and Strategies mini training series. Thank you for tuning in today. I'm Millen Livis, financial independence mentor for professional women who are determined to create financial independence so they enjoy more freedom and have more choices in their lives. There is an old saying that everything has a front and a back. If you have kids, it's a joy to have them, especially while they're young, but you have to put up with a lot of efforts that it takes to raise them, right? If you have a job, you have less risk and steady paycheck, but a ceiling with your income. If you have a business, you take more risk, but have possibility for higher financial rewards. And this old saying, everything has a front and a back, certainly applies to investing. So let's start with the benefits of investing in precious metals like gold and silver. Number one, precious metals have no credit risk, unlike fiat money, also known as paper money, that is government issued and as such is always subject to credit risk. Credit risk means that the holder of fiat currency, paper money, is a creditor of the banking system and as such is always subject to credit risk, as we've seen in recent years in Argentina, Greece, Hong Kong, and other countries. Okay, number two benefit. Historically, gold and silver maintain their global purchasing power over the long term, especially in the face of inflation and currency devaluation. And finally, number three benefit is that precious metals are not very tightly correlated with stocks, bonds, and real estate, which means that if we have a correction in the stock market, precious metals usually historically hold their value. Now, here are some downsides to investing in precious metals. Everything has benefits and downsides. So number one, commodities, including precious metals like gold and silver, produce no cash flow themselves and at times can be volatile. Number two, most precious metal miners, companies that mine these precious metals, are historically poorly managed companies, meaning that they often lose a lot of money. Number three, price of gold and silver could be quite volatile, especially in the short term. And finally, number four, storage of physical gold and silver could be a concern because you must figure out a safe and least expensive way to store them. You can see why the question whether investors should own gold and silver is somewhat controversial. On one hand, there are people who distrust the global economic system and financial system and invest almost entirely in precious metals. These people often referred to as gold bugs. On the other hand, many individual investment portfolios have zero exposure to precious metals because people want to receive income from their investments. Okay, in my opinion, some investors in different countries, but especially in the US, get too complacent. In my opinion, too complacent. They think that bad things that happen to other financial markets cannot happen in their own country. Well, big mistake. It can. In fact, it has happened to the US in the past, to the US financial system in the past. So if you are open to this premise, how much should you invest in gold and silver? How much? Let's talk about that. That's up to you and your unique circumstances, your age, the country you live in, your financial situation, etc. Right? So it depends. In general terms, I think that putting at least 5% of your investment portfolio in precious metals is a sensible choice. And personally, I would go to 10% or even higher, considering the current economic and financial climate and enormous debt most governments carry right now. Hedge fund manager and billionaire Ray Dalio recommends holding 5 to 10% allocation to gold and silver as part of his all-weather strategy. The reason I don't like to invest too much in precious metals is because if you invest too much, you risk missing out on income and growth opportunities that historically offered by other asset classes like stocks and bonds and real estate, etc. However, having no allocation into precious metals leaves you exposed to certain risks that stocks, real estate, and bonds cannot compensate for. So, the bottom line from today's training is this. Consider having at least 5 to 10% of your precious metals, of your investment portfolio invested in precious metals. Well, that's all for today's mini training. If anything you heard today resonated with you or gave you an aha, if you work hard to make money yet still don't feel financially secure, if you want to be financially independent or retire early, but don't know how or don't feel it's possible for you, I want to give you a Dump Money Worries and Create Your Future Now session with me. At the end of that session, you'll have tips and strategies you need to have more peace of mind about your financial future. My time is extremely limited, so I only can do that for the first 2 of you who will email me first. Email me, actually, yes, so you email me at millen@daretochange.live.com to schedule this session as soon as possible. This is normally a $497 session, but for the first 2 of you, it's gonna be my gift. Thank you so much for tuning in today. See you next week for the 4th episode of Wealth Building Tips and Strategies mini training, where I will share with you 3 methods you can invest in gold and silver. In the meantime, be wise about your money.
Grow your wealth, live on your terms.